Preparing for a transfer agency, fund operations, and MFD services at CAMS interview. You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What does a transfer agency or RTA do in the mutual fund industry? Transfer agency is the investor record-keeping backbone for a mutual fund. In a CAMS-type RTA role, I would maintain folios, process purchases, redemptions, switches, SIPs, and update investor master data. The key is accuracy, because units, NAV applicability, tax reporting, statements, and payouts all depend on clean records. The AMC manages the scheme. The RTA executes investor servicing and operations at scale, under regulatory timelines daily. While answering, focus on the RTA's role between investors and AMCs, core transaction processing, folio maintenance, servicing, record-keeping accuracy, and why CAMS matters in India's mutual fund infrastructure. Question 2. How do NAV cutoff timings affect mutual fund purchase or redemption processing? NAV cutoff decides which days NAV an investor gets, so it directly affects units allotted. I would first check transaction type, receipt time, valid application, payment realization rules, and scheme category, especially liquid versus non-liquid funds. If money or documents come after cutoff, next applicable NAV is used. In operations, I would document timestamps carefully because most disputes around allotment come from cutoff interpretation risk. Make sure to cover NAV cutoff logic, valid transaction time, payment realization, scheme type differences, investor impact, and how operations teams evidence timestamps to prevent disputes. Question 3. What checks would you perform before creating or updating an investor folio? A folio is the investor's account with the AMC, so creation has to be controlled. I would validate PAN, KYC status, bank details, holding pattern, tax status, nomination, communication details, and FATCA declarations before processing. If KYC is pending or data mismatches appear, I would raise an exception rather than forcing allotment. Good folio setup reduces future redemption, lien, transmission, and complaint issues significantly too. In your answer, talk about PAN, KYC, holding pattern, bank mandate, nomination, tax status, FATCA, address details, data quality, and why incorrect folio setup creates future operational breaks. Question 4. Walk me through how you would process a mutual fund purchase transaction. For a purchase, I would verify the application, investor KYC, scheme and plan, amount, payment mode, broker code, and receipt timestamp. Then I would apply cutoff rules, confirm fund realization where required, calculate units using applicable NAV, and generate confirmation. My control mindset is simple. No valid money, no valid documents, no clean allotment. That prevents wrong NAV, wrong commission, investor disputes, and later escalations. Be sure to mention application validation, KYC status, scheme plan option, payment verification, cutoff application, NAV, unit allotment, confirmation generation, and controls around broker code or source tagging. Question 5. What controls are important while processing a redemption request? Redemption is where investor servicing and risk control meet. I would validate the folio, units available, signature or authentication, bank mandate, lien or pledge status, exit load, tax implications, and cutoff timing. Once accepted, units are reduced and proceeds are paid to the registered bank within regulatory timelines. I would be extra careful with third-party bank changes because redemption fraud risk is real and material operationally. While answering, focus on unit availability, authentication, registered bank validation, liens, exit load, taxes, payout timelines, fraud risk, and why redemption processing requires stronger controls than routine servicing. Question 6. How does SIP processing work from an operations perspective? A SIP is a standing instruction to invest periodically, so the operational focus is mandate registration and cycle discipline. I would check investor consent, bank mandate, debit date, amount, scheme, frequency, and failed debit handling. Each successful debit becomes a purchase at applicable NAV. For exceptions, I would track rejections, pause or cancellation requests, and investor communication, because SIP errors create recurring complaints quickly downstream. Make sure to cover mandate registration, debit cycle, investor consent, bank rejections, installment processing, NAV allotment, failed transactions, cancellations, pauses, and recurring operational risks. Question 7. Explain the difference between switch, STP, and SWP transactions. Switches, STPs, and SWPs are linked transactions, not isolated entrals. The switch redeems one scheme and purchases another. STP does that on a schedule. SWP redeems periodically to pay the investor. I would ensure source units exist, exit load is applied, NAVs are correct, and both legs are posted cleanly. Breaks usually happen when one leg succeeds and the other fails in processing batches daily. In your answer, compare the transaction mechanics, source and target schemes, redemption and purchase legs, periodicity, NAV impact, exit load, and operational risk when one leg fails. Question 8. What reconciliations are common in mutual fund operations or RTA operations? Reconciliation is how we prove the RTA records match money movement and AMC books. I would compare bank collections, unit allotments, rejected transactions, payout files, commission entries, and suspense accounts. Any break should be aged, owned, explained, and cleared with evidence. In fund operations, unreconciled items are not just accounting noise. They can affect NAV confidence and investor trust during audits and regulator reviews too. Be sure to mention bank versus transaction reconciliation, unit capital, payout files, rejected transactions, suspense accounts, brokerage entries, aging breaks, ownership, evidence, and audit readiness. Question 9. How would you process IDCW or dividend payout and reinvestment for mutual fund investors? IDCW processing needs clean entitlement data. I would identify eligible unit holders as of the record date, apply the declared rate, calculate payout or reinvestment, deduct applicable tax where relevant, and update statements. The common risks are wrong record date holdings, incorrect bank details, failed payouts, and communication gaps. I would reconcile total declared amounts to scheme-level accounting before closure and investor reporting sign-off by operations teams. While answering, focus on record date, eligible unit holders, declared rate, payout versus reinvestment option, tax deduction, bank validation, failed payouts, investor communication, and scheme-level reconciliation. Question 10. What are the key responsibilities in MFD or mutual fund distributor services? MFD servicing is about accurate distributor mapping, commission support, and query resolution. I would check ARN validity, EUIN tagging, sub-broker codes, transaction source, clawback rules, brokerage rates, and trail calculations. If a distributor disputes commission, I would reconcile transaction-level feeds to payout reports and scheme rules. Good MFD support protects AMC relationships without compromising compliance or investor interest in any operational situation at scale daily. Make sure to cover ARN, EUIN, distributor mapping, brokerage or trail commission, sub-broker tagging, transaction source, commission disputes, clawbacks, service requests, and compliance boundaries. Question 11. What AML or KYC red flags would you watch for in transfer agency operations? In an RTA environment, AML is embedded in transaction processing. I would watch for PAN or KYC mismatches, multiple folios with unusual patterns, third-party payments, frequent bank changes before redemption, high-value transactions inconsistent with profile, and sanctioned party hits. The right response is not assumption. It is hold, document, escalate to compliance, and process only after clearance, with a clear audit trail for review later too. In your answer, talk about PAN mismatch, incomplete KYC, third-party payments, unusual transaction patterns, frequent bank changes, sanction screening, high-value transactions, escalation, and audit trail. Question 12. An investor complains that they received fewer units than expected. How would you handle it? If an investor says units are wrong, I would avoid giving a defensive answer. I would pull the application, timestamp, payment realization, NAV applied, transaction confirmation, and scheme rules. Then recalculate units independently. If CAMS made an error, I would escalate for correction and compensation process. If records are correct, I would explain the calculation clearly and close with evidence within service turnaround timelines agreed. Be sure to mention complaint ownership, transaction evidence, application time, payment realization, NAV used, recalculation, communication style, correction process, escalation, and closure within turnaround time. Question 13. How would you manage high transaction volumes while maintaining operational accuracy? High-volume fund operations need both speed and maker-checker discipline. I would prioritize regulatory deadlines, financial impact transactions, investor complaints, and aging exceptions. For controls, I would use input validation, queue monitoring, maker-checker review, exception reporting, and end-of-day reconciliation. Meeting TAT is important, but not by bypassing controls. A fast-wrong transaction becomes a bigger remediation issue for investors, AMCs, auditors, and operations leadership later too. While answering, focus on prioritization, maker-checker controls, queue monitoring, SOP adherence, exception management, EOD reconciliation, regulatory deadlines, quality checks, and not sacrificing control for speed. Question 14. Why is regulatory awareness important in a CAMS transfer agency role? For a CAMS interview, I would show awareness that RTA work is highly regulated. SEBI and AMFI expectations influence KYC, transaction cutoffs, disclosures, distributor codes, complaint handling, data privacy, and reporting timelines. I do not need to quote every circular, but I must show a compliance mindset, follow SOPs, preserve audit trails, and escalate deviations early before they become investor or regulatory issues material later. Make sure to cover SEBI, AMFI, KYC norms, cutoff rules, distributor requirements, complaint timelines, data privacy, audit trail, SOP compliance, and escalation of deviations. Question 15. Why do you want to work in CAMS fund operations or transfer agency services? I would position my interest around scale, precision, and market infrastructure. CAMS sits at the center of India's mutual fund ecosystem, connecting investors, AMCs, distributors, banks, and regulators. That makes the role operationally demanding and meaningful. I would emphasize my comfort with process discipline, reconciliations, Excel or system workflows, client service, and learning regulations quickly. The value I bring is accuracy under volume and pressure. In your answer, connect CAMS with mutual fund market infrastructure, scale, operational discipline, investor servicing, learning regulations, process accuracy, reconciliation skills, and comfort working under volume and deadlines. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.